Hello everyone, we're going to go live here in just a minute. Was in the middle of recording the daily video and then the breakout happened and I said, forget it, we're going live. We're going to look at Bitcoin, Ethereum, Litecoin, Verge, and Bitcoin Cash. I'm currently in a Bitcoin position. And we'll go over how the last 24 hours have played out, and then we'll branch off into some of these other names, Verge and BCH, to see what's going on in that neck of the woods as well. Waiting for a few more people to get in here. So we'll just get going. People can catch up. So what we're looking at on Bitcoin is we just had a bull break and a big spike. We're used to these big spikes and big dumps out of nowhere. We'll talk about that in just a moment. But what we're looking at, let's go back in time a little bit and see the 4-hour bearish reversal head and shoulders pattern that ended up breaking a key support level and the lack of follow through that resulted from that. And oftentimes we can look in the opposing direction on a signal where we don't get follow through. So what I mean by that is if we break a key resistance and we don't see any kind of spike in bull volume and follow through, then that can be taken as a bit of a bearish indication. And same thing in the other direction. So we had the break of the 4-hour higher low pattern, and it was on the potential news of the Attorney General that we shared in the last video. And we didn't see a whole lot of follow through. We saw a bounce. But on the bounce that was occurring last night, it looked like a very weak bounce. It looked like a bear flag that was going to see continuation to the downside. So we did see bear volume spike. This is the hourly chart from last night. This is when the support level broke from yesterday. And the bounce that ended up playing out looked like a bear flag where we have a weak bounce attempt, a weak channel, and it was another one of these fake outs. And these fake outs are getting really common due to lack of liquidity, which we'll talk about in just a moment. But this was the bear flag setup. We broke down. Look at the low of this candlestick. We got all the way down under 7,900. So it was a bearish break that looked really likely to begin confirming this bear flag for another leg down. And then the bulls showed up out of nowhere. And let's look at what that looked like on the shorter term time frame, the 5-minute time frame from last night. And it was just another one of those complete fake outs. And look at how short these time frame bursts are for these moves. So we had the clear bear break, and then the bull showed up out of nowhere. It took one 5-minute candlestick to see all that short squeeze action and all that movement. And look at the volume. It was all on one candlestick. And let's just look at how the last few hours it played out, the rest of the day. One candlestick on the bear dump, one candlestick on the bull move, and now one candlestick on the bull move. So what this tells me is this market is currently not very liquid, and big accounts can do this very easily with market orders, and what it's going to do is trigger stops or squeeze some shorts, liquidate positions, but you can see there's just not really much follow through once that move occurs. We do get, either consolidation, long and drawn out, but someone noticed on Twitter that the moves are happening 10 hours in between. It's not very consistent, but 10 hours in between the moves, something to be keeping an eye on overall. But bottom line, lack of liquidity is allowing people to see these kind of moves, and it's comparable to if you've been following Litecoin the last 6 months. Litecoin sees these kind of spikes and big sharp moves much more common than Bitcoin does, and the reason for that is because of liquidity, and it's because it takes a lot less dollar volume to move Litecoin than it does Bitcoin. And now we're seeing it show up on Bitcoin due to the lack of active traders and of big time market makers essentially controlling the price. And in my opinion, it's a lot of people sitting on the sidelines still, not sure if this is the bottom for Bitcoin, and didn't load in the $6,000, $7,000 range, so they're holding off a little bit. So people staying out of the market due to being unsure, and the lack of a ton of trading action holding up the volume is allowing these 5-minute candlesticks to do what they want. And you better believe that whoever is using these market orders to make these kind of candlesticks knows what they're doing in terms of technical analysis. They know when they're triggering stops. They know when they're trapping shorts. So it's definitely something to be aware of, and it's making trading very tricky. So there's a lot of people that are just sitting on the sidelines because they can't make sense of this action. That's a good idea. If you are not comfortable, absolutely sit on the sidelines during this action and learn a thing or two, because this kind of action, if you've been in cryptocurrency trading for the last 10 months to a year, we've seen so many different shifts in how trading has gone. And this is a new chapter. This is a new chapter after things have settled down significantly, but these 5-minute candlesticks out of nowhere are just making it pretty difficult. So 4-hour time frame, we did get a bull break here. We had lower high, lower low, another lower high, which was essentially a double top. We formed a lower high by an insignificant amount, and then we just got a bull break here which now has our only resistance, the top of that little 5-minute spike of 8,244, and then the top of this move at 8,400. And again, if we do get that continuation, that's what the bulls are looking for. Remember this weekly equilibrium pattern on Bitcoin, where we're looking for a move up to the upper 8,000 range, perhaps 9,000, to get nice and tight inside this pattern and to continue seeing it play out into May and June. But we do need another leg up for the bulls to be looking ideal, because if we were to top out right now and 8,400 was the top of this move and we started heading back down towards the mid 7,000, that's not a strong move. That favors the bears on this equilibrium because we did not bounce back to the midway point of this tightening pattern. Whereas if we get up to 9,000, that makes it more of a 50-50 game between the bulls and the bears as we look for the pattern to continue to tighten. So the bulls definitely want to see continuation on this bull flag with confirmation into tomorrow and a break of 8,400. The next resistance after 8,400, the next clear level for me is 9,000. There's a price level here. There's a couple of levels we could pick in between. I see 8,498, so we would call that 8,500, but essentially just psychological levels up towards 9,000, and we'll see how far the bulls can take it if they can get that break. Again, these moves are not sustained in the sense that it's just one 5-minute candlestick and then a ton of consolidation. The bulls will definitely take it. It's healthy consolidation and then continuation, but it's just not kind of it's a strange action. It's not the kind of powerful move and follow through and consistent volume that we have been used to. And we just have to adjust our game plan and trading style to match the market environment. It's very important to be agile enough to adjust your trading style. And this certainly is another instance of that. So what I would do in this situation to prevent from getting stopped out in certain scenarios would be to trade with smaller positions so I can use wider stop levels. And I entered on this consolidation and I initially was going to put a stop loss below the low of consolidation, but then looking back, seeing how many times we get the fake out before the breakout, and we had members pointing that out as well, it's certainly common the past week or so. I said, all right, I'm in a partial position. It's only a 20% position at this point. I can give it a lot more wiggle room before the loss gets meaningful. So I decided to just go down to the recent low, and I sat through this dump, and I said, all right, looking for a bounce and looking for a tightening range into tonight. And then we get the bull move out of nowhere. So I've been holding on to my position. And at this point, I'll probably stick it at the low of this consolidation. But bottom line is I'm comfortable where I'm at with my position because it's a smaller position and there's not as much risk involved. So Bitcoin now consolidating. We're going to look for the same kind of 5-minute healthy consolidation that we just saw. Let's look at it on the 15-minute time frame. It was nice and drawn out. Then the bull break, and we'll see if we stair step higher now at this point. It was notable bull volume, but again, it's just so short term and it's just in such a little spurt. It's not consistent. It's choppy action. So let's now look at the other names. Ethereum. Keep in mind, Ethereum never lost the 4-hour higher low pattern, and we just had an inside bar on the daily yesterday, which is about to break as I speak. Or trying to break. 4-hour time frame, higher lows maintained. We held the higher low on the 4-hour by just about $2, and now we broke the lower highs. So high, low, lower high, higher low. This was another lower high, inside bar, bull break. And if we can get over this 522 level, we're looking at the top of the move, 537.50 as the next resistance level. So it's a bull break of an equilibrium pattern. We're looking for a bull MACD cross on the 4-hour time frame here as well. And here we are about to break 522 and get that clear over this resistance as well. So just to compare it to where Bitcoin is on the 4-hour time frame, bull break of resistance, just looking at the high of the bull move, and Ethereum is about to be in the same place if we can break 522. Litecoin showed a little bit of bullish action early on in this move on the hourly time frame relative to Bitcoin and Ethereum, and we're about to test some key resistance here. Look at the daily chart on Litecoin and the lack of resistance after 140.55. So there's a little resistance between 140.55 and pretty much all the way through the 150s. Doesn't mean we're going to see a move to those levels, but just means there's a lack of resistance nearby, which makes it easier for the bulls to move. The 4-hour time frame here did not lose the higher low pattern because we had that breakout yesterday. It had an equilibrium bull break as well, with our high of the breakout, low of consolidation, lower high, higher low. Bull break happened early compared to Bitcoin and Ethereum, and now trying to get that follow through to break 140.55 and see continuation. So the bottom line on all of this is all of these charts are still bullish. Look at Ethereum on the daily time frame. It's a really healthy bull flag after the breakout, declining volume, healthy consolidation, looking for continuation. And if we get this continuation, we'll be looking for these weekly charts, at least Litecoin and Bitcoin's weekly chart to be looking good on this equilibrium. So here's again Litecoin's weekly chart. Let's get rid of some of these lines. But in order to get in the middle of this range on the equilibrium to give it a 50-50 shot for the bulls, obviously if we topped out here and then started to pull back, that favors the bears. If we can get the price move up to 165 or so to the middle of this range, that's going to put us in a 50-50 scenario in terms of which direction is more likely to break, because it will be an equal distance between resistance and support. And that's what the bulls are hoping for, to give a level playing field by getting back into the middle of that range. So that's where we stand. The bulls are breaking out right now, and we're going to test the high of these bounces shortly. And the red flag on all of this would be a loss of the higher low pattern. And again, the lesson with the head and shoulders pattern was the lack of follow through. We had what looked like follow through, but again, just one 5-minute candlestick completely changed the pattern that was setting up with the bear break, the loss of support, the weak bounce attempt, the potential for continuation down. And it's essentially one account with, a lot of money, obviously, to be throwing around huge market orders. But for one 5-minute candlestick to have the power to completely negate a bearish setup, that leaves a lot of power in the hand of perhaps one or just a couple of individuals to be able to dictate this chart and the direction that we are heading. So that's something to note and something to be keeping an eye on. And again, that's what we're seeing with this illiquid market right now and these 5-minute candlesticks that are running the show. So checking in on Verge, what I want to talk about on Verge, obviously a lot of hype and humor and all that on Verge with what's going on with their announcement with Pornhub. And I don't know the exact details of the leading up to the announcement, because that's what's most important with the psychology of a sell the news event. And just looking at this chart, it can tell me that, likely Verge was letting us know that there's some announcement coming up. If that was the case, and they were saying, okay, announcement's coming, this is the market pricing in that announcement. Markets are very good at pricing things in. So you have to understand that if we're going to run, let's just see, just in the week leading up, we ran from down at 741 all the way up to 11.5. So that's essentially over a 50% move. And that is pricing in the bullish news. So at that point, unless the news is, blow your socks off, we're not going to see the kind of reaction that's going to continue this move to the upside. The people that buy in when the market is pricing in bullish news are the people that are looking to sell the news and lock in their profit. They got in ahead of the news and they're looking to cash in before that, or I should say right after it. So the news came out, and this reaction, the market's reaction, doesn't really mean a whole lot to whether this news is bullish or bearish long term, fundamentally speaking. Because again, when you run up, and if we look at the weekly time frame, we ran up hundreds of percent. And if you see that kind of run up, again, you're going to see profit taking. And the scenario that I would compare it to in the stock market world would be earnings. So we have earnings right now, and Netflix just had earnings, and it's the first out of the tech sector to have its earnings, and it hit an all-time high on a bullish reaction to its earnings. So now we have, in the next couple of weeks, Apple, Amazon, Google, all these big tech names with their earnings approaching. And look what happened to Amazon after Netflix earnings come out. Amazon just breaks out with 2 gap ups in a row and a huge bull move. And that is the market pricing in a bullish reaction to Amazon's earnings, which have not come out yet, based on Netflix earnings that came out and had a bullish reaction. So the bottom line is, when Amazon's earnings do come out, a lot of the bullish reaction is already going to be priced in. So unless it's an extremely bullish reaction, we could have, bullish earnings come out and sell off, because the market has already priced in the anticipation of bullish earnings due to Netflix earnings. So that's a scenario, again, when the news event is known and anticipated in advance, you get a sell the news scenario. And the more you run up into the news event, the more likely that's going to be. So when the news finally came out, let's look on the hourly chart. We just had a huge spike up. We got way overbought. The hourly RSI was up in the 80s, and then it was just an all-out dump collapse as everybody sold the news. And again, it's not the market saying this is terrible news. We don't like this news. It's bad. It's not what we were hoping for. It's the market saying, okay, we just ran up hundreds of percent. We're seeing people take the profit who were only in it for the news, not in it for the long-term fundamental results of what the news is going to be. And they're exiting, and there's just no more buying pressure because everybody that was interested in this news already had a position before the news came out. So we're in a clear lower high, lower low pattern on the hourly. There will be a really nice bounce opportunity approaching because of all the volatility we've seen. Here's the daily chart. If we see a break of 812, we know we're not ready just yet, and we're coming down to lower lows after 812, 741. But the support that, or I should say the bull bounce that we're going to be looking for is going to occur when the hourly trend changes. We have clear hourly lower highs that have to break, lower highs, lower lows, and we're coming down to test this key support. This is a bottom fishing play setting up where you would put let's say you entered at 8.3 and you put a stop under 8.12. So you're risking a pretty small amount, and the reward is the potential of a bull break and a significant larger profit than you're risking on the bottom fishing play. That's one style. That's higher risk and higher reward. The other style is to patiently wait for the trend to break and then to get in, because what we're going to be looking for to happen on this 4-hour chart is absolutely a bounce to play out, and then we'll look for a lower high to be set. But on this bounce, we can be looking for, a 10% bounce at least once the momentum shifts. Once the selling pressure dries up on this move, we will be looking for a 10% bounce at least in order to see a tightening range form. We'll set the low on the daily chart, we'll bounce and set a lower high. And again, it's after all these volatile kind of moves that we see the equilibrium patterns play out. So we're just looking for the low of consolidation to form, for the start of an equilibrium pattern to form. And we're getting there, we're close to there. And I can say that because I can see the velocity is slowing down on this pullback. So perhaps this level will hold 812. If it does not, we need to be more patient. But hourly oversold RSI, if 812 does not hold, hourly oversold RSI is the time to start paying attention again for that potential daily higher low to form, which will form. We are going to form a daily higher low, and we'll see if the bulls can hold 741 to keep it a higher low pattern. But that's the scenario with Verge and News. And I made this play. The first play I made in cryptocurrency was Ethereum back in May. When I first started trading Ethereum in May 2017, they had the event, and it's slipping my mind right now. Oh man, the big event. Anyways, the big conference coming up. Someone's going to say it in the chat room. I appreciate that. But that was a Sell the News event, and we ran up into that event, and let's look at it real quick. And I sold knowing just stock market experience, knowing what happens in that kind of scenario. And here is a run-up that we had in May, and it wasn't a significant pullback, but it was definitely enough to make a flip, which I ended up doing. And I believe it was right here. Consensus, is that the name? Anyway, 217.85, and then we pulled all the way back in 3 days down to 115. So that's a huge pullback, $100. That's a 45% pullback. And I remember that was one of my first trades that I made, where I was initially long on Ethereum, and then when it got that extended leading up into the event, I sold and then rebought. And again, just the standard psychology of a Sell the News event, which is common in every market that you will trade. So let's now look at BCH, which is leading the way. Everybody, Bitcoin, Ethereum, and Litecoin, that is looking at this daily chart is hoping that they can do what BCH is doing, because this is perfection of a bull flag seeing continuation. So healthy consolidation, lower wick of bulls buying the dip, declining bear volume, and then a big time continuation breaking to a higher high. So this would be like if all of our names that we're watching right now broke to higher highs on the daily time frame to see follow through. So the resistance that we're looking at from here, aside from the top of 899.7, which we can just call 900 psychological, the next level we're going to be looking at is up at 925. So we are definitely a bit overextended. The 4-hour time frame at this point, the RSI is overbought. We just got up to 80, and now we're seeing some healthy consolidation. The 4-hour higher low of support is 821. And you can see it's not taking a whole lot of bull volume to see this kind of move. But look at the fake out. We had our high, low, lower high, lower low, long lower wick of bulls buying the dip, and then a complete turnaround. Let's see if it was a 5-minute candlestick like it was on Bitcoin. And it was. It was one 5-minute candlestick. Again, all it takes is just one market sell order, trigger a bunch of stops, buy that up, and then a complete turnaround with a fake out. It traps the bears, and it gives the bulls an opportunity to load cheap on those stop losses triggering. So as long as we're seeing these 5-minute candlesticks making up the entirety of breakouts and dumps, we're going to know that we have a lack of liquidity, and we're going to know that there's a lot more likelihood of fake outs on these signals on these charts. So again, as long as we see these candlesticks on the 5-minute time frame dictating action, it's going to be a harder trading environment, absolutely. And if you're learning to trade in this environment, it's going to be at a disadvantage. So smarter people have been taking off if they're not comfortable just sitting it out and watching how it plays out and learning lessons from it. So BCH on the hourly, sideways trading right now, very healthy consolidation overall. Bull still holding on strong. And even if we do pull back, into the mid 800s, we should still keep this hourly higher low pattern intact for the time being. So BCH, clear lead bull on this break on the daily chart, and we'll see if the other names follow. But look at the weekly chart for BCH. We're not doing anything to change this trend between lower highs and lower lows. So the last bounce attempt resistance was 1636. And that's the last clear bounce attempt on the weekly time frame. So I would say we're a ways away from changing this trend on the weekly chart. We'll likely have to set a lower high, higher low, higher high in order to change this trend. But no doubt the bounce is underway and the bulls do have momentum in their favor. And we'll see if we can see healthy hourly consolidation to try and keep this bull move in control and in favor for those bulls. Checking back in on Bitcoin, still consolidating. And again, it's just, you look at the 5-minute time frames and it's just a sea of one big 5-minute candlestick dictating direction. And that is not the ideal market to be trading in. And we certainly did not see this kind of action when we had all that volume and volatility back just months ago, both on the way up and the way down. We had a lot more volume and volatility, and now we're in a little bit of a tightening zone. And if we continue to stay in this weekly equilibrium and continue to see tightening zones, the ability of these whales to manipulate the price to a certain degree with these 5-minute candlesticks is going to remain. And then once we break this weekly equilibrium, that's when a lot more traders and a lot more liquidity will come into the market, and it will not be as common. So as long as this weekly equilibrium is in play, in my opinion, we have to be cautious of these fakeouts and 5-minute candlesticks. So I appreciate you tuning in. I was about 5 minutes into my recording my own video and just said, forget it. Too much is going on, got to go live. And of course, all that went on happened in one 5-minute candlestick, and now we're back to waiting patiently to see what the consolidation looks like. So as far as my position goes on Bitcoin, I'm going to be holding it for now, and I will exit if we lose the higher low pattern, likely on the hourly time frame. But you could also use the 15-minute time frame here of 80.80. But again, have to be watching for the fake outs, which are very common the last couple days. So I appreciate you all tuning in. Appreciate the support for those of you that bought from my friend's Etsy account. I'm going to do some of that myself as well once I see what everybody else did, and I'll match those orders. I hope you continue to do good things. For today's, let's see, what do I want to talk about today? I want to talk about hustle, and I made a video for the crypto course recently, which was about hustle and, just putting in the extra effort and getting ahead in life and standing out and things like that. But one thing I want to talk about is hustle in terms of entrepreneurial spirit, where if you're trying to accumulate capital to trade with, there are so many ways that we can do this, whether it's, going to yard sales and flipping things. It seems like small amounts of money, but it certainly adds up. And the reason that this is coming to mind is, I have a $120 office chair that I can't fit in my car. I'm about to be moving, and I'm just going to give it away. It's 6 months old, and I don't want it anymore. So I post on my Facebook, to my friends, hey, here's a free office chair. I just bought it. This is what it's worth, and I don't even care if you put it on Craigslist for 50, 60 bucks, whatever. And just the fact that nobody really wants to jump on that opportunity, you have to put in the effort to, have, like I talk about, having as many income streams as you can to build capital to be able to trade with. Whereas, if I wasn't mowing lawns for $20 back in high school, I wouldn't have built up the $3,000 that I initially began trading with, and which snowballed into not needing a job for 5 years. So having that extra capital coming in and, not having to take money out of your normal budget or things like that to trade with is definitely beneficial. So get your entrepreneurial wheels spinning in your brain and think of, what ways can I make a little bit of extra income and contribute that income towards my trading capital? Because the more capital you have and the more profits that you can compound, the quicker you're going to build that capital up. So, whether it's just going to yard sales and looking at the records, I have a cousin who does this and has been doing this for a decade, and he'll go and he'll look at the sales on eBay or whatever it is and see if it's a hot enough item, and he'll buy records for $5 and flip them for $40. And again, it doesn't seem like a ton of money, but if you're consistently doing it, it absolutely adds up, and it can make a big difference. If your trading account is $5,000 and, over 4 months, 6 months, you're able to rack up some odd jobs and add another $1,000 to that, every profit that you see on that account now has just been magnified by 20%. So that's that. Appreciate you watching. Hope you have a good rest of your day, and we will see you tomorrow with some more 5-minute spike candlesticks, I'm assuming.